Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert over here, and you know you're rolling with Laney, the Dividend Diplomats, and we're here to talk to you about another stock that we have to potentially buy the dip on.
You know, we're always looking for those dips to buy, but before we get into there, smash that subscribe button. Give us a thumbs up. Everybody, we are so pumped today to talk to you about this potentially undervalued dividend stock to buy. Maybe, maybe not. You're going to find out in this video, everybody.
Thanks, Bert. So we've talked about this dividend stock for quite some time. In fact, a few weeks ago we talked about 3 chip dividend stocks to buy in case you missed it, but their share price was a couple of dollars higher then, so it's definitely less expensive now. So the question is, do you buy the dip? Did you buy this dip? Did you buy the dip?
I'm trying to remember if I bought the dip here. I think I did
He
buy
might
a
have bought
couple
the
of
dip.
shares
You
on
dipped
that
it?
dip.
You dipped the chip? Did you double dip the chip?
No, I only bought it once. Did you buy the
He
dip?
did not. I did not buy the dip yet. I'm thinking of buying the dip.
Uh-oh. Uh-oh.
If
Wow.
you dip, we dip, you dip. All right, so guys, we're here to talk about a dividend stock that is undervalued right now, and it's definitely cheaper. We were talking none other than Intel, ticker symbol INTC, Bert.
Why do we love this company? Because their stock price has come down from the highs that we were seeing earlier in the year. Despite when we start to peel back some of the earnings and you actually start looking at the income statement, you're looking at some of the news that's being released about the company, there are some very positive signs in there.
So, in case you don't know, back all the way, if we rewind the tape, in April, Intel was actually trading at almost $70. When we recorded our last video, they were down in that low 54, upper 53 range. As of August 20th, Intel was actually trading at only $52.01 per share. And actually, they were recently trading even far below that, in the low 51s.
So I wonder, it's interesting, are they trending down to break below that $50 mark that they haven't been at for quite some
That could be the
time?
resistance level right there.
Yeah, and if they hit below 50, are they going to keep tumbling down even lower, or are they going to pop back up and have enough people buying that dip?
The reason why we're looking at Intel, obviously as dividend investors, we like to accumulate shares in undervalued dividend stocks that produce dividend income because we still think it is the best form of passive income for you. Just look at the chart. The dividend wheel is amazing. Again, Intel down almost $18 per share from its recent high in 2021. How can you not have this on your stock watch list?
I know, I mean, despite the fact there is a chip shortage that's impacting not just Intel, but everybody in this trade.
It is your favorite flavor chip.
I guess so, computer chips. Who doesn't love those every evening? But you're seeing the shortages hit everybody. Intel, it's going to take some time, it's going to take some money. They're investing in the infrastructure now to avoid future chip shortages so they can maintain that position as the market leader and continue battling AMD, one of their biggest rivals at the moment.
No, exactly. And everybody thinks that AMD is going to take over Intel in the spot as the majority leader of market share in the chip industry. I still think Intel is still here to stay.
Yeah, it kind of reminds me, I mean, Clubber Lang, he beat a lot of boxers on his way to face Rocky, but at the end of the day, he even beat Rocky 1. But hey, by the end of Rocky 3, guess who came out on top? Sly. Sly never loses.
And you hit him with the left and you hit him with the right, Bert.
Yeah, so hey, that's what we feel about Intel eventually.
Adrian.
Intel by Rocky 4 will be climbing up that mountain facing Drago, raising his hand, saying he's ready to fight and defend his
Intel, I
friend.
did it. So Intel, currently in my portfolio, and again, you could check the link to the portfolio we posted on the blog, and I know I update mine pretty frequently, almost on a weekly basis. I own over 150 shares of big chip maker Intel. So obviously, it's interesting that I'm still looking at Intel, even though I bought them way back in the day in the 20s, but I have recently bought them in the upper 40s.
That's what our metrics and that's what our stock screener is designed to do. It ignores the appreciation that may have happened from owning a stock 10 years. You're looking at the metrics today. Are they undervalued today? Yeah, you're right. Stock price grows because earnings grow, because revenue grows. So you're seeing
decline.
Yeah. Well, we can talk about that when we do our next purchase video, Landon. If we want to talk about buying those.
Yeah, buying those stock buybacks. So with Intel, yes, there's a chip shortage. Yes, they're doing things to address it. But guess what? Everybody has some sort of supply chain shortage. So we want to run Intel through the Dividend Diplomat stock screener. Again, focus on the 3 metrics. Bert hit him with the 3.
Price to earnings ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, where you look at the average dividend growth rate and how long a company has been increasing the dividends. And then lastly, I don't know what you were doing, Lanny, but
It's all good.
it sure beats one of those terrible chip puns you were making earlier in the video. So then the last metric we look at is that bonus metric, the dividend yield.
And Bert, before we get in, so you bought some Intel recently.
I have, yeah, not a lot of shares, just a few, several to build, but we've also been adding it to my wife's portfolio over the last year. We're going to continue seeing Intel continuously evaluate them while they're hanging low.
Yep, pick the low-hanging fruit, as they say.
Yeah.
So Intel trading at $52.01 with analysts expecting forward earnings of $4.79. This PE ratio is still below 11 as the first metric.
Yeah, well below the market, whose PE ratio is at 35 on a historical basis and 20 to 25 typically on a forward basis.
Let's talk to us about your favorite metric, the dividend payout ratio.
I like all three of our metrics the same. I don't have a favorite child, but I do like looking at the payout ratio. Your annual dividend is $1.39. You divide it by that $4.79 earnings. That is a low payout ratio of 29.02%.
Beautiful child, right?
It is. Again, all three children are beautiful. We don't have any ugly ducklings in this family.
Wow. All right, so that payout ratio of 29%. It's not in that sweet spot that we like, a 40 to 60, but it's low enough that they can keep reinvesting, keep making new infrastructures to produce chips. They can keep raising that dividend safely. No risk of a dividend cut with Intel.
Exactly, Lanny. The third metric, we're going to look at their 5-year average dividend growth rate of 6.14%.
Pretty good.
Yeah, that's well above the historical inflation mark, and that's even above the current higher inflation marks that we're seeing here in 2021. They've increased that dividend for 6 consecutive years, too.
Nice. They had like a little lull. It's kind of interesting. Bert, you remember, I think, vividly.
Yeah,
I was like,
I
when
do.
is the dividend increase coming?
Yes, things like that drive Lanny insane.
It drives me nuts when they go off schedule, and Intel kind of goes off schedule a little bit, but they've been more consistent recently with the dividend increase, which makes us dividend investors very happy. So Bert, that bonus metric, the dividend yield, with that forward dividend, $1.39 spread over obviously 4 quarters, that dividend yield currently is 2.67%, 2 times the stock market yield.
And 5 times your savings rates, typically what you're getting if you are trying to maximize them with your high yield savings accounts.
That's right. You know, in year to date, they really haven't grown in share price much. You know, a little over 4%, and on the 52-week from August to August, they're only up a little over 5%, trailing the market.
And that's why we're here today, though, because they are trailing the S&P 500, because they are showing signs of undervaluation. They've come down from those highs and those percent growth rates that were higher than the S&P 500 earlier in the year.
I might go aggressive here, and if it dips below 52 this week, you know, I may have to just drop, 10 more shares into the account.
Love it. That's a great pickup.
I'm saying this, obviously do your own math, your own homework, your own judgment, but I think this is a stock to buy for my portfolio.
Yeah, we'll probably be adding because it's been hard to...
Both diplomats buying a stock.
Don't know how many shares, but in all seriousness, it's been hard to find undervalued stocks in this market.
Hard.
Yeah, our purchases have come down recently from where they were a month or two ago as the market continues to climb.
On the sidelines.
Pissing me off. So companies like Intel are a good fit for that.
You don't want to see Bert upset.
It takes a lot to get me really upset, but...
Yeah, no, that's the bottom line.
Yeah, yeah. So everybody, let's just summarize them one more time, the metrics. PE ratio, 10.86. Payout ratio, 29%. 5-year dividend growth rate, 6.14. 6 years increasing your dividend, and a yield at 2.67%.
Passing all the dividend stock metrics. Again, do you buy the dip? I'm probably buying the dip. And Bert?
Probably buying the dip.
Buying the dip. Let us know in the comments if you bought the dip or if you're about to buy the dip. Are you buying the stock right now, or are you taking a hard pass at Intel? Do you believe AMD versus Intel? Who's better? Let us know.
And if you haven't already, subscribe to our channel.
Yeah.
Give us a thumbs up. Thanks for helping us get 10,000, everybody. We appreciate it.
Oh, wow, jinx.
Yeah.
Jeez.
Yeah.
That was Bert, and this is Laney from the Dividend Diplomats.
Over and out.